Welcome back, guys, and welcome to 2022. Happy New Year, everyone. And once again, my name is Adam, and I have with me Rusmin and Victor.
Hi,
Happy
everyone.
New Year.
Happy New Year.
Thank you so much for joining us in the new year. And at this roundtable, we're going to talk about Mapletree Commercial Trust and Mapletree North Asia Commercial Trust and their proposed merger. It's going to form one of the biggest REITs in Asia.
Someone's going to get married.
Someone's going to get married. Okay, so these two REITs are going to get married, but of course there's going to be a vote to decide that first. But we're going to discuss the details of this merger and whether it makes sense if you are an MCT or Mapletree North Asia Commercial Trust shareholder. All right, so we're going to go through that. So before we dive into the pros and cons, let's just give a very brief overview of the details of this merger.
Yeah, so what's going to happen is that Mapletree and Commercial and Mapletree North Asia Commercial, both are listed in Singapore Stock Exchange. It's going to merge together, and the new entity is going to be called Mapletree Pan Asia Commercial Trust. In short, we call it MPAC. Okay, they're going to create an impact to our portfolio, hopefully. And if you look at
I hope.
Hopefully it's a good one. So essentially for Mapletree Commercial Trust unit holders, if this deal goes through, you will have immediate exposures to countries like Hong Kong, China, Japan, Korea. All right, so this is no longer a pure Singapore assets, real estate commercial trust player. And if you are the Mapletree North Asia unit holders, obviously you're going to have exposure in Singapore through the asset that owned by Mapletree Commercial Trust. Okay, so these two ones that merge, I think the biggest asset that is going to contribute to the bottom line in terms of net property income is going to be your Festival Walk, about 22%, and then followed by Mapletree Business City, which is 24%, and then the third largest is going to be your Vivo City. Okay, then the rest will come from other Singapore property, office property, China, and Japan. Okay, so this enlarged entity will ultimately, according to them, it's going to create the 7 largest REITs in Asia by market cap. Okay, so obviously this will benefit the sponsor and the risk manager because it will make it easier for them to make acquisition. Hopefully you also benefit the unit holders in terms of funding. You have more sources to look at, and also you can potentially help to bring down the cost of funding because you are bigger. Okay, so everyone seems to be going to size matters.
Yeah.
It matters.
I mean, we've seen a spate of a lot of Singapore REITs over the last couple of years merging.
Yes.
So we saw with CapitaLand, Mall Trust with
CapitaLand Commercial Trust, and then you have got Fraser's Logistics Industrial also merged together.
Yeah.
And of course we have OUE Commercial and Hospitality also merge. And more REITs are basically merging because they just want to form the biggest REITs in Asia.
So that I think it gives them a bit more flexibility in the markets to move around, like you say, to make acquisitions.
It's a whole lot easier.
It's a whole lot easier compared to a smaller REIT. So I think, I remember going to the AGMs of MCT and North Asia, and a lot of times, when all this mergers were going on in other REITs in Singapore, a lot of unit holders were asking the directors whether Mapletree was considering actually merging some of their sister REITs together, and the answer was always no. So this actually caught me by surprise that they finally decided to kind of combine MCT, which I think is one of the best REITs around in Singapore, with Mapletree North Asia. So I think just to summarize the deal, basically you have MCT, which are all these Singapore assets. Vivo City is its crown jewel, and then you have North Asia, which is based around Greater China, or I think Japan as well, right? And the biggest asset is Festival Walk, which is a big mall in Hong Kong.
It's a very big walk.
You've been there, right, Victor?
Yeah, I've been
what was
to
it like?
Festival Mall before the riots and protests and all this.
Protests.
Before the protests.
Some people call it riots,
okay, so before the protests, I went to Festival Walk. I mean, it's super crowded.
Yep.
It looks like a Vivo City to me. The interesting thing is that there's very minimum tourists, but mostly I see it's like local Hong Kong, people go to the festival.
So it was like Cantonese all around you.
Yeah, it's very crowded, Okay. I mean, and the brands inside are really like those it's not those you go to some of the malls, it's like cheap brands and all. It's really most of the shops, right? There's a mid-tier to high-end brands.
Okay. So high street and luxury brands.
And it's just right beside the I think the MTR. From the second level, you can just walk through the mall.
Yeah, I would consider this as a suburban malls, and they've got pretty good catchment area over there. So it's I think according to them, before the Hong Kong protests, right, their sales from reliance on Chinese tourists actually only like teens level, like 15%. So about actually contributed by Hong Kong people.
So in that sense, it's very stable because you have a local catchment that's always shopping there.
Yes.
I think if you put into perspective, right, it's basically the VivoCity of Hong Kong.
Okay.
Right.
So just to like bring it back together, so we have these two REITs that are merging together. To form one really humongous REIT, 7th largest in Asia. So I think as if you're already a unit holder of either REIT, you kind of know what the assets are of your particular REIT and of your sister REIT as well. So then right now we're going to discuss the pros and cons of the merger and whether it makes sense for you as an MCT unit holder or a North Asia unit holder. Does it actually make sense? All right, so let's start with the pros and cons. I mean, let's just get things going.
I think we start with the good one first.
Let's start with the pros.
Okay,
what do you think of the deal?
The pros are basically they have become one of the largest REITs top 10, right? And honestly speaking, this doesn't really benefit unit holders. Although I did say that, mentioned that it helps in terms of cost of funding, acquisition opportunity, but as a unit holder of MCT myself, I don't see any tangible benefit out of this. Okay, apart from if you're the risk manager, obviously you are managing a very big assets. Right now, you've got more fees to earn as well. Although they did say that they want to waive off these acquisition fees, for the sponsor, which is pretty good. Okay, in my opinion. And that is actually one of the cons. One of the pros actually. And then the other benefits is it will gonna helps to improve the liquidity of the units, the REITs itself, okay, for the new entity, because currently the MSCI Singapore Index allocation for MCT is only 1.6%. So after they merge, the allocation limit will actually increase to 2.4%. So again, as a unit holder, you can't really quantify this because index, it depends on how the ETF deploy their funds. Maybe it will help to improve the valuations of the REITs itself, but there's no tangible benefits out of it. Okay, you can't confirm or certain that it's going to benefit in that way, right? And of course, the other benefit that they did mention is the tenant diversifications. Obviously, your tenants' reliance on both NCT and Mapletree North Asia Trust. For BMW, is the largest for Mapletree North Asia, and then Google is the largest, about 10% for MCT. So after this merged entity, the Google will fall to about 5.7%, and then the BMW is going to fall to about 3.8%. Okay, so honestly speaking, as a unit holders of MCT, I don't see much benefit out of this because it's okay to have good tenants concentration if the tenants are solid like Google. Right? I don't think they're going to default on that. So I don't see much benefit out of this, honestly speaking. And then, of course, the other one is that the sponsor going to waive the acquisition fee, which I mentioned it here, because eventually, after they merge together, the fee structure is going to shift from the percentage of the base fee and performance fee to a new model, which is basically what Mapletree North Asia is using it right now. Basically, you will base on their base fee of the distributable income instead of the total assets. And plus, they will only earn the performance fee if they can grow the distribution per unit year-on-year basis, which is the structure that is more aligned to the unit holders.
Yeah, that's a good thing.
Yeah, I think this is a very good thing. So when I first saw this structure, I was thinking, wow, this is really good. Right? So it really incentivize, the manager to actually grow the DPU. And moreover, the measure going to be the existing MCT's manager, which they already have a very good track record of very shareholder friendly. They do things that are in line with the shareholder. Okay.
Yeah.
So this prevents the cases where the manager will go on an acquisition frenzy and get very high pay and the DPU will keep dropping. So it's a very, very good structure.
Yeah. So I must shout out to MCT managers also, because even without this new incentive model, they have been performing pretty well
for the last 10 years.
Since listing until today. So I mean, with this new incentives model, I think that will incentivize them to do the right thing, continue to do the right thing. Okay, so and I think I'm pretty impressed with this new structure moving forward. And I think the most tangible benefit that unit holders can see as an MCT unit holders is maybe if this deal goes through, I think we're going to see the pro forma DPU based on what they have is that we're going to have a higher DPU of around 7.5% to 8.9%. So it depends on which option option the Mapletree North Asia unit holders choose. Okay, because there are two options that we'll talk about it later, right? Towards the end of the video. Okay, so and NAV they also benefit will increase by around 6.5% to about 7.1%. Okay, it depends on which option that they choose. Okay, so in terms of DPU accretion is pretty attractive for MCT unit holders. And then, of course, if you are the North Asia unit holders, you will also benefited from the price that they are offering to do a share swap or unit swap with MCT. Okay, so the effective price that they're going to buy you out, essentially not buying out but swapping, is going to be at a price of around 1.19, which is very close to the North Asia latest net asset value. Okay, so if you look at the Mapletree North Asia historical price to book, I think there has been trading at a discount, okay, below the net asset value. I think on average is about 0.83, right? It was as low as 0.6, I think, during the COVID level, and of course in good times it was at around one time. Okay, so at uncertain time like now, you have someone that's trying to buy you out at about $1, swapping the units at $1, which is about 1 time, okay, which is pretty attractive.
It's very attractive for the North Asia.
So and the other benefits that they mention is that you're going to get geography diversification. A big question mark for me, because
I mean, this is what the managers would say.
The manager was saying you're going to have more diversified portfolio, you have more exposure.
Your
in
investment
country.
mandate expands as well, because now you can invest in Greater China, which is a huge region, right?
So to me, this is nonsense. Because when I invest in Mapletree Commercial Trust, I invest because it's a pure play Singapore asset, right? And those who invest in North Asia also believes that they want to have a foreign exposure, but now they are being forced. There's still an option to vote for sure, right? But to me, this is almost like a done deal, right? All the merger seems like always a done deal. They're going to get a local exposure now. Okay, so honestly, as a MCT unit holders, I am not very happy with this merger, because I will being exposed to the forex risk, okay, because now I have to get rental income coming from Hong Kong, China, Japan, Korea. So those were the fluctuation of forex is real, right? So sometimes you don't know how that will affect your DPU. Okay. So and that is going to be quite a big part of it. I think it's about close to 40%. You have natural, immediate foreign exposure from your MCT, for our MCT investment. Okay.
So I think that's probably the reason why you can see the price actually dropping for MCT. Because some of the, I think the shareholder, they just want to own Singapore property.
They want a pure play Singapore.
They don't want to own foreign, you expose yourself, you increase the risk and all this.
Okay. Right? So I think that's the main criticism I've seen so far about this merger, but I just want to backtrack a little bit. So I think just to summarize, the pros of the deal is that basically MCT unit holders get to enjoy a higher DPU pro forma if the deal goes through. And for North Asia unit holders, they get to
enjoy more things.
They get to sell out at a higher price, and they now get pretty solid assets.
Yeah, then they get a very good manager also.
So those are the pros, but now the cons, and I think we can zoom in on this thing about diversification. I mean, this geographic diversification, and how you don't like it, because you essentially what you're saying is that you don't need the REIT to merge to give you that diversification, because you can do it at a portfolio level. But now you're kind of like stuck with both the best and worst of both worlds. Right.
And I think also even before this merger is happening, I think MCT is doing very well. Right. I mean, they still got a pipeline to acquire more of the business park.
In Singapore,
the
Alexandria precinct, actually.
And their business park is doing very well also. Right. Got one part that they bought, they're still doing very well. They are growing. VivoCity, I think they are experiencing rental reversions and all this. So I think even without this merger, they are doing very well. But with this merger, it's really increasing the risk for the MCT shareholder.
Okay. Right. So let's just zoom in on what other cons do you see? I mean, that's the main one that we hear a lot. Among the investor circles. What else? What other cons do you see?
The other one is, I think the gearing level is going to go up for MCT unit holders. Okay. Because previously we were looking at MCT gearing level was pretty low at about 33.7%. North Asia is actually on the high side. I mean, this is an investment that is always on a high risk, right? And it comes with higher yield as well. And it stood at about 42.2%.
Okay.
And averaging out at about 39.2% once it's merged. Okay, so that gearing level will go up for MCT unit holders, but North Asia will see their gearing drop, okay, which is good for them, right? Not a good thing for
I mean, you're going to
MCT.
average it out in a way, right?
Yes, yeah. And then, of course, they did mention that there will be some benefits for the AEI and development headroom. Again, this doesn't really matter to me because there isn't much AEI for VivoCity to begin with, right? And they did a few times of asset enhancement initiative, but it was on a very small scale.
Yep.
And then business park, I think hardly there will be any AEIs going on. It's a business park. I don't know. Maybe they still find ways to.
Well, you can argue that you don't actually need North Asia to do all these asset enhancements, right? You can do it by yourself for MCT.
For MCT,
Yeah, right.
So they can just do it by themselves without the.
I mean, MCT have been doing very, very good AEI. You go to VivoCity, you don't look around.
Yeah.
They really can squeeze out any space out,
Yeah,
So I know you live near VivoCity,
Yeah.
VivoCity, so it's still packed even during COVID and all that stuff, right?
I mean, it's even more packed now. Right?
You get a queue to go in sometimes.
Yeah.
Okay, so it's just massive and it's crowded.
Yeah. So if you look at they did actually a performance measurement since IPO until now. Mapletree North Commercial Trust, okay, their DPU performance for 9 years and a half has been compounding at about 4.8% a year, which is growing,
which
right?
is good, yeah.
Which is good, impressive actually. And Mapletree North Asia is about 1.9%. It's slightly below. I don't blame them because they didn't do so well. Okay, in fact, plus 1.9% is not bad. Okay? In fact, they've done even better, if not because of the Hong Kong protests. So it's quite unfortunate that they have to go through what Hong Kong has gone through for the last couple of years. Okay, Hong Kong protests, and then subsequently got COVID, and until today they're still
recovering from that.
Recovering from that. So the performance has been affected by that. Okay, so I think as a whole, I think this merger is really not necessary for Mapletree commercial unit holders. I mean, I don't really look out for size for the sake of the size, right? To me, what is important is as an investors, you just want to make sure that this investment stay as a low risk investment, and that has been the case for Mapletree Commercial Trust until this merger comes out. Then today I have to review my Mapletree Commercial Trust and whether this is a REIT that I will own for the long term. Okay, because the risk profile has changed dramatically after this merger announced.
Okay, so just to summarize the cons, I think the main thing I hear is that basically you view that MCT is a higher quality REIT.
Yes.
In general, because of the track record and the assets that it owns. And then North Asia is a decent REIT.
Decent REIT,
but it
has a higher risk.
Less high quality than MCT. And now you're merging both of them.
They have higher risk because of the foreign exposure, right? And in fact, if you look at their distribution yield for the past 5 years, North Asia has been trading at on average about 6.7%. Mapletree Commercial Trust the yield is actually lower at 4.8%. Why is it lower? Because the risk is lower. And you understand it better because we all live in Singapore, right?
And then, of course, the other major one is, like you say, forex exposure, and of course, the geographic diversification. You don't actually want that sometimes. All right. So I think you kind of know the pros and cons of the deal. I think we've laid them out pretty clearly. I think your views have been expressed. But so I think it goes to, this question now: would you vote for or against the merger as an MCT and a North Asia unit holder? I think the answer is quite clear. But I think we should just say it out.
I think if you are a North Asia shareholder, I think you should vote yes. Right?
We are trying to be objective here.
Okay.
If
no recommendations to do anything, but if you were
North Asia, you should vote yes.
Okay.
Right? But
because
if you are MCT, the deal is very, very favorable to you.
Okay.
Right. You got everything. You get back to one time, close to one time, and all this. Right. Your debts are reduced. You got quite a good asset with a good manager coming and all this. Okay. But of course, if you are MCT, I think I just want the Singapore property. I don't want to get
I will obviously vote no. Although I think high chance this is going to be a done deal, right? But I will still try my luck. I will vote no.
Okay.
Because I don't like the fact that
vote no for MCT.
MCT.
So just as a disclosure, so you are MCT unit holder, right?
No,
all of us are actually.
Yeah, I have some share in North Asia, but very small share. So which I use it for AGMs purposes. But so I will be voting no for this deal, right?
Okay.
But in the event when this deal goes through, for North Asia unit holders, of course you need to choose between two schemes, right? So one is cash and scrip consideration. The other one is scrip only consideration. Okay, so basically cash and scrip consideration is that you're going to receive your 84% of the price that they offer to so-called swap in terms of units to directly you will be given units of MCT. Okay, so that exchange ratio is going to be at about 0.5. Okay, so that is something that you need to take note. And of course, then the other one is, and on top of it, they'll give you 16% of it cash, okay, which is equal to about 19 cents, thereabout as a one-time dividends. Okay, so, and then the other one is scrip dividends. And this scrip dividends, the conversion is 0.5963. I think I mentioned previously the ratio for the first option is actually 0.5. Okay, so the first option is actually more attractive because you're going to get lesser all shares. Okay, so if you convert at 0.50009 versus if you convert at 0.5963, okay, you're going to get more odd share for second option. Okay, so that's one reason what I will opt for one. Okay, the option number one. Okay, and second reason, of course, I get to cash out. Okay, about 16% of it as in the form of cash. Because I'm going to swap these units at $2 for MCT, and I don't like to pay the price of $2 for MCT. I want to have a better price, so there's option for me to receive cash. I would just rather take.
So if you're a North Asia unit holder and you had to choose, you would go with the cash and scrip.
That is better in my opinion.
I mean that's one option. There's another option also.
Yeah.
I mean another option is that if you're not sure whether the deal is going to go through in the event, right? If you are North Asia, right, you can actually sell the share off the market right now, right? And you won't end up with any odd lots. But if the deal don't go through, the share price will definitely drop. Then you can just buy back.
So that's the third option. So basically, the unit price of North Asia has already gone up to match the deal.
Yeah,
not yet,
1.13, I think.
At the time of this recording.
Yeah, so I mean, by the time you watch this, the price could be different. Unless it goes up to 1.19 above, right? Then that actually makes sense for you to just sell off of the open market. And then buy, if let's say MCT is trading at below $2, it makes sense to just buy off now, sell North Asia and then buy MCT.
Yeah, but I doubt they will go above the 1.19. But my take is that why I'm saying this option is because if you see the difference, let's say now it's 1.13, the difference is like 6 cents and all this, right? I mean, unless you own a lot of shares, the 6 cents is just a few amount, right? But if the deal don't go through, it's definitely going to fall back to the previous price, and that's the risk reward again.
So basically that is our stand, right? And of course I need to highlight that after this merger go through, and why I will vote no for commercial trust is mainly because I looked at North Asia before. In fact, during the protest, when the share price started to plunge, and it was an opportunity back then, right? So when I was looking at Festival Walk, one thing that I really don't like is the land title, the tenure of it. It's only going to expire, is the land use right expiry is going to end in 2047, right? So we are in the 2022. So that if you minus out, you're going to left about 25 years left. Okay, so for retail malls that with a land tenure of less than 25 years, okay, I don't think that is a very certain.
And there's a question mark whether the lease will be renewed by the Chinese government.
We don't know what is going to happen to that because there's uncertainty over there, and when it comes to past the when it's left with 10 years, the decay rate for the investment property will decline very fast. Unless they manage to extend it early. But at this stage, no one's.
It's a question mark.
It's a big question mark. And this is a big part of the portfolio. Eventually, it's going to end up in the merged entity. 24%, right? So it matters to me. That's why I say I will have to review my Mapletree Commercial Trust again, whether it's going to be a long-term investment. It's a big question mark for me.
All right, so I think we kind of summarize this whole merger. I think from the perspective of an MCT unit holder and a North Asia unit holder, the pros and cons as well. So we're not making any recommendation what you should do during the vote. Please make your own due diligence and decide what makes sense for you and how you're going to vote for yourself. As either shareholder is really, really going to be up to you. But as unit holders ourselves of MCT, this is our opinion and what we like and don't like about the deal.
And you should receive the circulars by the end of March, according to their timeline. And I think you can start to vote at the EGM in April. Right. And if everything goes through, then of course, end of May or June, you start to see the new entity being.
So there's still some time to go.
Take your time to digest.
Take your time to digest.
Maybe the news is going to change again. You never know. Maybe higher offer.
Unlikely.
I mean, that was what happened with SPH, right? But I don't think this is going to happen.
I don't think it's going to happen.
So again, please do your own due diligence and decide for yourself, whether this merger makes sense. In our opinion, we've shared our views, what we think about the pros and cons, and what we're going to do you as MCT unit holders primarily.
Yep.
All right. So once again, thank you so much for watching this roundtable. Welcome back. And once again, my name is Adam. This is Rusmin. This is Victor.
Thank you.
Thank you so much, and welcome to the new year. Any questions about this deal, feel free to put them in the comment section. If you like this video, please hit the like button. Tell us we're doing a great job. And of course, subscribe to our channel in the new year. So many more topics that are going to come out that we're going to discuss as well. And you're going to get them as soon as they come out if you're subscribed. All right. So once again, thank you so much for watching, and we'll see you around again.